Welcome back to the Cosas Verdes crypto trading show, where we trade and or make videos with stains on our shirt and an unshaven face because we're here to make money, not to look pretty. So new crypto investors or folks looking to have some interest in trading, this channel covers two things. First off, if you're looking for a place to teach you where to buy and where to sell, well, you're at the wrong place, because that's not going to happen. That's actually impossible. What this channel does, it addresses the two biggest mistakes you're making to help you better buy and sell at strategic places. First, I teach you how to have a statistically probable trade when you enter and hit buy with your money, and I teach you strategic zones in which to sell and take profits. So that's the two things we do on this channel, and they're two biggest mistakes that crypto investors and or folks looking to trade are making. If that sounds good, my content is best watched on ×2 speed, and I have a library of free information that's in the description section, and it's on a playlist called Library. A lot of free stuff, so you can understand when I say 4-hour 21 EMA, all that description is in there. You can watch it on ×2 speed. So returning folks, Cryptillion and Crypto Crackhead Army, are you ready? New viewers, if you end up subscribing, you got to let me know in the comment section if you want to be a Cryptillion or a Crypto Crackhead. You got to choose your gender. So everybody, turn it up to ×2 speed, because we have initiation of typification. Let's get it. I'm on a crackhead time frame. Woof. All right. So let me go to normal EMAs and monthly. I wanted to show you all something really neat here. So you're probably watching a lot of channels where they use, complex things like, oh, Fibonacci and this and that, and oh, this retracement, and oh, it hit it perfectly and all this and that, right? Well, let me show you more simple things that's really going on, that just those Fibonacci, since they're like 8 and 10 options, they just happen to land on one, which is common case because there are a lot of options. But let me show you something a lot more simpler. And so this line right here, so I'm on a monthly candle. So each of these is price action of a whole month, right? What happened to Bitcoin price over a whole month? This line here is the 10 EMA. So the average of, so where the candle closes, the average of 10 of those, with favoritism towards the most recent ones. So it's like a favoritism average type of deal. Anyway, the monthly close is extremely important right now, because if Bitcoin closes below, that mostly seals the deal on the idea that this will be a continued bear market for several months, if not a year, with the likelihood there'll probably be a relief rally, but you would want to sell into that, right? And this closes today. So today, this is a really important day, 8 p.m. New York time, Great Britain, London time. I think that's 1 a.m. on 1 a.m. Okay, so after you're seeing this 1 a.m. So this is a big deal, and there's a lot writing on this, and it has been for 2 months, because people are thinking bear market, bear market, bear market, and so the battle has actually been on for 2 entire months, and that line is the basis for pretty much all the trading activity, and I want to show you how. Okay, so that line and these monthly closes and openings. Okay, so I'll mark that. I'll get rid of my pink lines here. Should have done that earlier. I got a lot on there. All right, perfect. All right, monthly there. So I'm just going to write, so what I did was I extended this red line so it stays there when I get off of this time frame, right? So you can still see it on the crackhead time frames. And you know what? I might actually make it a little longer than that. So let me go like this, something like that, and I'll make it red. All right, so that's about right. And then I'll make a line where these candles open and close. I'll make a line where these candles opened and close, to show you that trading can be extremely simple with one moving average, exponential moving average, and a few horizontals to make it all make sense of what the hell is really happening here, right? So now I'll go to the weekly and do something kind of similar, but only with horizontals. So I'll look at where a ton of price closed. So several candle bodies close in the same area. And I would say, so you have one wick, two. So this is probably a pretty important line. And I'll make these weekly lines pink. So some of them are the same. Some of the weekly lines will be the same as a as a monthly line, and I won't do those. All right, so just keep things really simple here. We're literally making straight lines, and we drew one line in, right? Then we had a couple candle closings here. And I meant to make these pink. And this, once we zoom in on the small time frames, you're going to see how these come into play. And then one more really important line that we had was the daily 200 EMA. One of the most important things in play, and you'll see here that it marked the high of this rally almost perfectly. But it's even more interesting to watch on the smaller time frames. That's why I'm going to draw them in. This is really, really cool stuff. So I'm showing you, and then I might draw in one more EMA so it stays, was the weekly 55. So I'll draw that in here, and I'll make it the same color blue. And now we're going to zoom in and see how price on small time frames reacted to all these. So, you're not all worried about using, weird indicators, this and that. So it makes more sense. All right, so let's dive into here and take off that. I have to do the 5 minute, but yeah, let's do the 5 minute. All right, so remember this red line? That's the monthly 10 EMA. Each of this is 5 minutes. So look how much respect and how much activity of tops and bottoms, mostly tops, because it's been acting as resistance a lot. But look how much activity it perfectly got. Look at all this. Look at all this. And this one, it bounced off of it. This one, it bounced from it. Then it bounced past it. And now when it's coming back up to it, it's being resistance, right? That's some current stuff. But we'll go back even farther because last month's closing, the same red line, was super important too. So we'll go back in the month of May and you'll be able to see, like, look at this. I mean, let's zoom into this. This rally here, right there. I mean, just look at this. So 34,900, 34, so $20 different, almost exact. So when you're dealing with tens of thousands of dollars, that's to the penny. That is to the penny, right? Figuratively, to the dollar. If you divided by 100, right? And just look how much trading activity happened around here, right? So this line is the battle zone. It is the battle front line. So bulls winning when price is on this side. Bears winning when price is on that side. It's that simple, right? For this portion of it. So we're getting to the middle of June, and it's been a battle the whole month, as you'll see. So here for a while it's acting as support. See all these times it came down, wick to it, right? It's a reason. There's a reason these a lot of these horizontals have on the smaller time frames have come up. It's from the monthly 10. If you made horizontals on these time frames here. So you can just see, let's just keep scrolling across. Let's even go to the previous month. Okay, now we're in May, finally. So this is the, so in May, it screamed past and it didn't come back down to test it up till the end of May. So this is till the end of May here. So at the end of May, it rallied past it, came back down, tested it, couldn't do it, broke through it, and it's just a bunch of fake out moves. But it perfectly based on it right there. And this is a 5-minute chart. Still in May, you can still see from all this activity of just highs and lows and resistance, it clearly stopped here, right? Clearly stopped here. It didn't stop here. It didn't get all this choppy action. It went straight out, it got choppy right there, right? Forceful up, pause here. So it's just incredible how much respect this line has been getting. And so hopefully it's been making these last 2 months not just make a little bit more sense, but also it makes you understand the importance of these candle closings closing above the 10. And the reason because it's so important, that's why this line has been the front of, this has been the battle line. This has been it, right? And so So let's take a look maybe on the, say on the 5-minute chart. So look at these weekly closings here, okay? And look at the daily 200. So we'll go back. So this is when Bitcoin was still falling down, right? Yes. Okay. So once Bitcoin broke below this, it had look at the strong move after it broke the daily 200. Boom. Where did it go down to? Well, it went almost to this weekly line here of support. Where did it ended up settling after all this volatility? On the weekly 89. So let's see here. Let's take a look at these two, like these 3 pink lines. Let me make them a little thicker so you can actually see them. So now we're looking at the weekly lines and maybe the blue line for the EMA and how the weekly has been in play here as essentially kind of borders. Like if you're fighting a war and if you're on this side, you know, this is the bear territory. It's almost like a football field, right? If, you know, if the bulls or if the bears can get down here, they score a touchdown. But you have these zones where it's hard to pass because the bulls are stopping them, right? They're trying to get them not to score a touchdown in American football or whatever sport, or a goal. You know, the soccer goal is down here, and the goalie of the bulls is here. So all these areas, you got more defenders, and these weekly lines are what those are. These are like, so even though it's not the front line, these are like where defenders are lined up to make it so that you can't kick a goal, right? And so let's focus on these pink lines and maybe even this blue line. The blue line's kind of a big area of defense too. So the very first big drop down, big weekly line, you're not kicking the goal. We have a lot of defenders here. Okay, price, bears doing it again. We have defenders here. Okay, well, bears kind of regroup, and we broke this line, but nope, we bulls have even more defenders on this weekly 55 EMA. Tricked you. It's not just going to be a line; it's going to be the moving line with the EMA, right? So both of these are really important. All right, so and then the bears got tired, like, oh man, we really tried, too many defenders, we're worn out. So then the bulls started taking over, and they started winning the battle. And at this point here, this pink line, which is a weekly zone, so the goal of the goal that the bulls are trying to kick, and so the goalie of the bear is here. So the bear goalie's there, right? And so now the bears are defending. As price goes up and up this pink line, we got a lot of defenders. It's pretty hard to pass. Oh, we think we're passing. Nope, you got defended. Okay, let's try it one more time. Let's give it a tag. Oh, yes, we got past them. Even more defenders here. More bears step in here. Even more defenders. Okay, let's try it one more time. Nope, not even close. All right. And then these defenders of the bears actually got strong enough where they pushed the bulls down, and then they took back over the battle. And then a battle happened around the front line. So this is like the middle of the fight. Like this is where, you know, the soldiers of both armies, if you can imagine, you know, most of this is like guerrilla warfare nowadays and shooting from the skies. But in the 1800s, early 1900s, how wars were fought. So this is where, you know, the soldiers weren't all scattered. Everybody is just like slaying at the front line. That's what this is. Right? And so when bears are, you know, when bulls are getting deep into bear territory, not all of the bulls are here, but they have lines of defense. And maybe, you know, the people from back here are trying to chase them. We're going to try to, you know, catch up. And then they finally caught up and they beat them down. And then they all went to the front line, and just a big battle happened on that red line, which is the monthly bid. Like this is what's happening, right? It's a story. I'm freaking telling you, like. This is why I this is why I like price movement. All right. So after this big battle of the front line, you know, the bulls actually, you know, the bear said, "Oh shit, they're hurting us too much. So let's maybe retreat a little bit or whatever, or go back to our last line of defense. Like let's retreat back to our last line of defense so they can't kick a goal that is up here." And so the bull's like, okay, we got this. Oh, no, we're going to put some defenders here. Sorry. Okay, let's try again. Nope, we got defenders here. Okay, we broke past them. These defenders stepped in. You're not going to be even close. You can't even kick a goal, bitches. And then The bears actually started pushing them down, and then you get back to the front battle line. The bulls, hit them a little harder, but the bears said, we got a lot of defenders here now. We're going to push you back to the front lines, and then back to the front lines for a big battle win, right? And so on and so forth. You get the picture. But it all happens around these lines. Look, okay, look. So another, so after a big frontline battle, the bears started winning. Then it's like an arm wrestling contest, and then the bulls started winning. Then back to the front line, and then back to the front line, and then the bulls, really started kicking butt. They broke past this huge line of defenders, hence that big candle, right? So look at this. There must have been a lot of volume there, like they planned this attack to get past this line of defense. See that? There aren't many, segments where you see a big pop like that. That it did it around that line for a reason. Like I swear, like it's a story. You just have to see it like a fight or like or an arm wrestling competition or what. More honestly, you should see it like a war. It is a war. It's literally a war. All right, and so the bulls really start doing really well, and the goal, the goal is here, and the bears goalie is here. Like, oh crap, and then they get to this front line where they have a ton of defenders, and then the bulls kick a goal, but the goalie blocked it. So boom, back price went down. Right, that's the highest it got because the goal's there, and they put all their defenders there, and actually. The bulls shot a goal. They shot a goal, but it got blocked or just missed. And then the other team gets the ball or whatever, right? So imagine it's okay. Now the other team gets the ball. So where does price go? Back closer to bearish territory, right? So it goes back to the front line. Back to the front line we go. Big battle. Oh, like wishy-washy control. Who's going to win? And then bears come out on top. And then price stopped here in these areas. Why? Well, you have a pink line for a week, another pink line for a week, and a third line for the EMA. So they were kind of like, together here. So you have a crap ton of defenders here. And then essentially so the goal is here, and the goalie for the bulls is down here. And then the bears got to kick a goal, but it also got blocked. Right? Because they have a lot of defenders here, but it peeked through the defenders. It kicked a goal. They kicked a goal and missed or got blocked. So now the bears get the bulls get their chance, go back to the front line, big battle at the front line, and then maybe a turnover, and then back to the front line. Bulls take a quick, quick breather, but this is all one battle around the line because this month is getting ready to close today. So let's see if around go back to June 1st and May 31st, I always use the 30 days past September, April, June, and November. All the rest of 31. Except that one February, which has 28, and on leap year's 29. All right, anyway. But really all you got to do in your head is 30 days past September, April, June, November, right? So that's how I do it. But yeah, so look what happened last month. So this marks the turn. So right here is the month. So right before the month, do you think it's coincidence that the battle was happening at the red line right before the monthly close? No, it is not a freaking coincidence. And the bulls pushed price up because it said, we don't want a freaking bear market. Yo. So they turned it up. And they allowed the candle to close above it. And what happened? Well, then they went to go try to get closer to the goal. And then their efforts ended up allowing them to kick a goal. Their momentum stopped here. And then the bears did the same thing. Their momentum stopped there. Now, it's at the end of the month. Do you think it's a coincidence that price is right here? It is not. This is what's happening in price. All these all these fancy tools that you got, yeah, it helps you predict, who's, winning what portion or, are, at the front line, is it going to go up or down from here? Sure, that's what tools do, sure. But the more indicators and like just draw Fibonacci or Ichimoku cloud or whatever that Ichimoku or whatever or Fibonacci bands or this and that or it makes you not understand what's happening behind the front. I mean, you don't know what's happening. You don't understand why all that's happening. But literally just drawing a few straight lines and understanding the importance of them and where defenders step in and why, it makes everything make so much more sense. And so the reason I'm making this video is because it's one thing to say, oh, it's important to have candle closings and all that stuff. But when I was watching traders, 4.5 years back, and actually I still watch other traders. I mean, shoot, I have to collect market data, right? So, and I watch fundamentalists too, who don't do trading, although they sometimes pull up a graph, but they never pretend to really be a trader, right? The folks who talk about projects or talk about this, talk about that, right? Some of the folks those are typically the parties who lead noobs to buy things that went on a 3,000% tear up to the upside, right? But anyway, it's still good to watch them because fundamentals are a part of this as well. But in my opinion, it's I don't know, it's not as imminent or immediate of a of news or information. It's information that plays out in the long term, but it's still important to know. But anyway, so as I was watching traders throughout when I was learning how to trade and reading books, I always read, oh, the candle closing is important, the monthly or the weekly or even the 4-hour candle closings are important. I'll prove it to you here in just a second. But it just never made sense until I stared at charts long enough and I'm like, holy shit. This is literally a war. Like when people say it's a battle between the bulls and the bears, it really is. If you see it as a soccer game or an actual war from 100+ years ago, that how wars used to be fought, right? Like marching towards our front line, which is nowadays seen as totally retarded. But that's what it is. And hopefully that story allows you to understand the importance specifically of candle closings. And not just this monthly closing, but in the lines of defense for that line, in the battle of that line, it's the weekly. So the next time frame down below, the monthly is the weekly. And these weekly lines are super important because those are the lines of defense for the monthly. And you can actually break it down farther and farther and farther, but I typically only use weekly lines, maybe a daily line here and there. And when I'm crackhead trading, I might draw a few like hourly lines, maybe. But I make those thin lines and I make my weekly lines thicker on purpose so I know where most defenders are going to step in. And you have the biggest chance for a bounce there. And if you break below it, that's when you get all in 5 minutes, like a huge drop, because you broke through that line of defense, right? So let me show you another way. Even down to so typically the 4-hour, I mean, sometimes the hourly can be pretty important, but there's too many fake outs. But the 4 hours really, really freaking important. Let me see here. Which one was it? It was recent. Okay, it might have been this 4-hour here. So at 2000 hours, let's go down to the 5-minute. Yep. So this candle went from 2000 hours from right here to 24 to 0. Right there. So the bears waited. So this is called an end of candle attack. The bears did not kick in full force until when? The last 5 minutes, the last half hour of that 4-hour candle. They turned up their attack. And really, that attack was probably planned because they knew the bulls just put everything they could into it, and the bulls were a little worn out. So the bears were conserving their energy, knowing that these guys are worn out anyway. We're pretty fresh. So let's wait until the last little bit of this candle and attack it. And so that candle closing was attacked. And that set the pace for the bears to continue marching it down because they were able to really put all their force at that one candle. And because they put it all at the end, it closed deep red, which means the momentum is now down. And so fewer bulls, so going outside of this time frame or outside of the war thing, but just in terms of actual market buyers and people in the market or institutions buying whoever, algorithms, whatever, it takes a little longer for people to step back in and be buyers until it looks like the bears are also tired. Then they'll mostly step in, but all because of that 4-hour candle. And they waited until the end to attack it. And because it went so far deep, that red candle, a lot of buyers said, momentum's down. I'm not going to step in to be a buyer until it looks like they're worn out. So that's why end of candle attacks and beginning of candle attacks work. And sometimes end of candle attacks, they're actually fake outs. So if a hedge fund or whoever's dealing with tens of millions, if not hundreds of millions of dollars of Bitcoin, wants to, like, imagine there's like a really important trend line. Actually, no, here's a good example. So we know that this is really important, right? So let's say this was the end of a 4-hour right here, and this was the beginning of whatever. Actually, wait, that might actually be it. Oh shit, it is. Nope, this is the very beginning. So this is the beginning of candle attack. Exactly. Okay, perfect. Right there. So beginning of candles right there. So they put all their effort into the beginning and then kind of took it easy the rest of the way because they knew if they put all of their effort at the beginning, instead of spreading out their efforts, they would be able to drive price down. So you had end of candle, beginning of candle. So it was like a 1-2 punch in a boxing match. It's planned, folks. I'm telling you. It is freaking planned. So the 4-hour is really important candle. It's really important. And sometimes if you're iffy and you don't know which way a trade's going to go, I have a habit of going to the 4-hour and looking here. How much time is left on that 4-hour? And if there's only like 20 minutes left, I'm freaking waiting. I am not entering a trade 20 minutes from a 4-hour candle closing because a lot of shit can happen. And if you don't see anything happen and you think it's going to break up, well, perhaps entering a trade with a stop because you could get a beginning of candle attack and you could really ride that, but it can also go the other way. So you always got to be careful and with risk management. So, so the whole point of this video is not just the importance of this monthly closing, but first off, if there's, a single thing that you could change or add to your thinking during trading, if you could simply add the importance of candle closings while also seeing how time frame horizontals are the lines of defense around that candle closing, or a line that the candle has to close around. Just the importance of candle closings and horizontals where defenders step in and understanding the story behind it instead of just drawing lines and not understanding why. Like, it's just because. No, it's not just because. Right? So I want you to, if you could just add that to your thinking, almost like if you are a baseball player or a golfer or a soccer player, you have thoughts about right before you kick that ball in soccer, how you're going to kick it, how high you want it to go, how far it needs to go. You think about that attack, right? You have thoughts of that movement or of that action, or especially golfers. Golfers have a lot of thoughts, right? Like, one year it'll be several thoughts, and the next year, if they form other bad habits because they mastered those, they don't have to think about it anymore. They always have like 3 thoughts. It's usually about 3 golfers have. Or a baseball player, okay, don't pull your left foot, or keep your shoulders level. Don't go like this in your swing, right? So you have sports thoughts, right, before you take a major and important action. So if you can add those thoughts to your trading actions, you're going to be a hell of a lot better of a trader. Or if you're not a trader, you're an investor, you're going to better understand where you might have statistical odds of entering a trade so that you're in the green. And you're going to know if I'm in the green and I'm getting in this bullish control zone, where are defenders stepping in? So I might want to take profits there with a chance of buying it back down here. Now I could buy even more And then I can, if I think the trend will continue, then I buy it back here. But I take profits between. I don't just say, oh, I bought down here, I'm going to wait a year for it to go over here. Hell no. I want to mathematically prove to you why that is true. So so from a mathematical standpoint, this is how it's going to help you. So let's say on a chart that Bitcoin, let's say Bitcoin recovers and goes to 60K, right? So, if this was the 60K round to top, 58K lower high, crash, all this stuff, higher high, then a lower low, then right now we're about here, right? So if you go, actually that's pretty good. That's about what Bitcoin price looks like on the daily. So that's actually, can you tell I stare at charts a lot, right? So this would be the 64 or 66K top, 64K top, something like that. This would be the 58K before the drop off. This is 29K. This is getting rejected by the daily 200, and this is the lower low down to 28K, right? Actually, let's take a look. It gets distorted on the daily, but look, my drawing, look at that. See, 58K top, then you made your higher high around, so it was the third hump, right? So the getting rejected at the highest point here was the third hump. Now let's go back to the 4. See how well I do that. So 1, 2, third hump. See that? All right, anyway, so imagine that Bitcoin, I'll mathematically prove to you why, how behind the math behind this, why knowing this is going to make you more money. So watch. So let's say Bitcoin, even though I don't think this is what's going to happen, but let's just say it starts recovering from here, all right? And it ends up making all-time highs, right? So there you go, 8 all-time highs. So if you enter a trade around here, so let's say you got in here and you sell right after a breakout, you let it gain some steam, then you sell up here. Your vector of profits is this. It's this stick between these two areas, right? It's the distance between those two areas represents linearly your profit. However, Bitcoin does not move like this. I wish it did. Sometimes it does. It did from friggin' late October to January, and then January to April. Something like, no, March. March we had a dip, but anyway, it was like this dip here. Anyway, 40K. So this is your vector of profit. What happens, though, is this. Like, let's say in a very bullish scenario, you have just a series of higher lows, maybe one revisits, higher lows. Let me scan out here. Higher lows, maybe a retest, and breakout. Something like that. So, I'm not saying that you can sell every damn top and buy back at every bottom. That is impossible. Do not strive to do that. However, if you know that there's a major resistance here because it topped out twice, that selling there at least one time is a good idea because it could crash from there. Or if it makes a higher low and starts getting momentum again, then you would buy back the higher low. And if you sold Bitcoin here and bought it back somewhere, like even not at the bottom, like right here, right? You buy more Bitcoin. Because you sold it higher and you bought lower. You have more. So if you trade on smaller time frames, the goal is to get with a major trend, but also intermittently take quick profits on counter trends. So this right here is counter trend, that down is counter trend, counter trend, counter trend. And if you could just, even on some of them, like get like half of that counter trend, because you saw a big horizontal, you got half of that counter trend. You actually sold it again, got half of that counter trend. Saw a horizontal, got half of that counter trend, bought back some so I'm saying half because you can't sell exactly the top by exactly the bottom. So you don't get the whole counter trend, right? You only get snippets of it, right? If you can do that just a few times and get snippets of it, then you have to take the vector between, or the portion, the distance between those lines. And if you did it 1, 2, 3, 4 times, you add to your profit those 4 lines. 1, 2, 3, 4. And your new profit in the same move of Bitcoin breaking out, you sold at the same point. Instead of having this much profit, so let's move these. I can't move it down, can I? It's logarithmic. Whatever. Instead of having this much profit, you will have that much profit. So which profit do you want? Do you want this profit or you want that profit, right? It's more. And that's mathematically, what would happen if you simply, over time added more and more strategy to your trading or even your investing. Sometimes in investing, if you see a big weekly, a weekly line, maybe you should sell like 30%. And in my description section, I have something that's called 10 bag. You'll see it in there, but you can make that a 30 bag or a 50 bag, meaning if I hold, let's say, VeChain and it's approaching a big resistance area, I don't want to sell all my VeChain, but I want to be able to buy back some lower because I think it's going to bounce down, but then ultimately recover. You can sell like 30% of your VeChain, and then with that 30%, be holding a stable coin. And then when VeChain makes a higher low and it starts getting confident, buy it back. And now you have more VeChain than you did before. But the cool thing about that is, if it just busts right through it on the first try, well, shit, at least you have 70% of your VeChain that's also growing, so that if it does bust through and then come to retest it, then you can buy it back for about the same price almost every time. But at least 70% was growing that whole time as well. And you only have to figure out, okay, how do I get that back with 30%? But usually it works out pretty well if you have a statistical edge. So over time, this edge will give you a bigger vector of profit. And that's why it's so important to add things like I've done today, the importance of candles and horizontals to your trading. So if you like the content and you're new, hit subscribe, hit the bell, give me a thumbs up, help the algo. Even if you didn't like it, no, I'm just kidding. Don't hit thumbs up if you didn't like it. But if you like the content, do all that stuff. And if you are new and you subscribe, let me know in the comment section whether you want to be a cryptillion or a crypto crackhead. You have to choose your gender pronoun. They're both gender neutral and gender fluid. Y'all just got typified.